Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. And please note, I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. We can see the global markets were mainly green across the last trading session. The US market, stocks came up, except for the more defensive sectors such as energy, healthcare, and consumer defensive. The probability of a 25 basis point increase in the federal funds rate at the next FOMC meeting on the 1st of Feb 2023 actually increased from 75.7% to 79.2%. On the back of this, crypto did quite well. So let's run the numbers. Bitcoin is currently up 2.41% to 17,337. Ethereum is up 5.38% to 1333. Bitcoin is currently 17,257. Yesterday's price action, we put a couple of different things up, and the one thing to note was this particular area between 17,100 and 17,200. We saw a lot of short liquidations push the price of Bitcoin above this 17,200 mark, and then it turned it to support. What we're currently seeing is a bit of a retracement. This is the key thing to understand in market. Resistance acts as resistance until it's turned to support. With the CTKS Method Standard Certification process, we look for areas of support and resistance. The areas of support are in green. The areas of resistance are in red. Support means that buyers will come into the market and support the price in an upward trajectory. Resistance means the sellers will come in and try to push the price down. Buying is represented by those green areas. Selling is represented by the red areas. And in between, that kind of amber area, just think about it like a traffic light, represents caution. Bitcoin is currently coming into a support area at 17,173 to 17,235. There is another support zone beneath that from $16,989 to $17,075. Support and resistance levels are always changing in market. That's why we look at Objective Dynamic Market Structure, or ODMS. After a big price increase, it's very, very normal for a retracement to occur. Structurally, we have two smart money buy levels in market at 16,889 to 16,812. The thing to bear in mind, because of the way that prices come up, if we get a retracement back to these smart money buy levels, it's not necessarily positive. And if we start to go below 16,812, it is quite negative in terms of objective dynamic market structure. The market gives the feeling that it wants to come up and challenge those smart money sell levels between 17,665 and 17,856. The key to applying this knowledge is to keep your eye on this particular gravitational pattern of Bitcoin. I want to show you what I look for in this particular structure. If we look at this breakout here, this big candle through, the secondary candle around the top of that candle approximately is about midway in terms of the first immediate support level. And when we look at this breakthrough, the peak of that second candle, even though it was sold off, is around midway in that buy level. So we're looking at approximately 17,200 in Bitcoin and 17,000 as well. Those two buy areas. Now we're going to parallel that into the top 8. We always say that no alt can escape Bitcoin's gravity, so when we put in those two key levels, and we're on different charts with different axes and different ways of comparing price action, we can see that's approximately there for the secondary support level and approximately at 3.87% for the first. When we parallel that to Ethereum, we can see Ethereum is still above its first support level and way above its secondary support. When we look at BNB, it's cut through a first support level relative to Bitcoin's pattern, and it could well be on the way to the secondary support. We can see XRP has been very choppy. It's lost that first support level in Bitcoin, and it's probably on its way down to the second. And when we look at ADA, ADA has just taken off, but no alt can withstand Bitcoin's gravity. It's lost that first initial support relative to Bitcoin, and this is a very unique way of looking at market structure. And we know that all price is always moving in a wave. I'm just overlaying it here so it's a little bit easier for you to understand the cross relativities between Bitcoin and your beloved alts. Of course, the alt's own market structure will impact how it relates to Bitcoin. But the key thing to understand, no alt can escape Bitcoin's gravity. As Bitcoin comes down, also the alts will come down, and this is something to bear in mind. And when Bitcoin goes up, especially if it goes up hard, the alts will come up as well. Some suppress, some will rally, and that's really dependent on their own internal market structures. The greatest gainers over the past 24 hours, and we can see CoinMarketCap has gone a little bit bananas. Gala is number one in the greatest increases, up 19.2%. And then Aptos, up 30%, is number two. Hang on a sec. Aptos should be number one. CoinMarketCap, what are you doing? Okay, you get the idea. ZIL up 25.5. Whoa, up 26% now. Solana up 18%. CRV nearly 17% up. Filecoin just about 11%, and Kava over 11%. Oh, CoinMarketCap. And this is where we get the percentages from each and every day. It hasn't happened in a while, but we can see that a lot of stablecoins have made their way into the top list of losers in the top 100. The DAI stablecoin, True USD, Pax Dollar, USDC, Circle, Tether, Binance USD. Extending our analysis to the next top 8, we can see Doge is selling off with Bitcoin, but more severely. Matic is just selling down with Bitcoin. You can see how Bitcoin's gravitational alignment does impact your beloved alts. DAI is a stable coin. When we have a look at Litecoin, we can see how Bitcoin's gravity is indeed affecting all the alts. A lot of people have not made this connection between Bitcoin and the alts. It's one of the most important things you can do as a professional and non-retail investor and trader, is to understand the overlay of Bitcoin's gravity on your beloved alts. It will make a game-changing difference. And we talk at length about this inside the masterclass. We saw yesterday that the shorts were coming out of the market, and that gave the longs a lot of confidence to come into the market, and they're getting liquidated right now, but liquidated back to a smart money support level as well. So just bear this in mind. We know where they are because we know how to read the footprints of Bitcoin's price action. Yesterday's 24-hour liquidations were 53 million. Today, they're 242.43 million. Whoa! Across 67,949 positions. We can see how just how quickly the market can turn. And in the past 24 hours, 85% of total liquidations have been short. What about the past 12 hours? 70%. Past 4 hours, oh, it's gone the other way, 74% long. And the past hour, yeah, we can see it, 99% long. You can see when the price is coming down or going up, by orders of magnitude. Either the shorts or the longs are getting hit. What is causing Bitcoin to actually come down? One thing that's occurring, the DXY has started to go up. And why has it started to go up? Because through CTKS Method Standards Certification, we can draw in these SLs or Stanfield levels, which define where smart money is going to step in and buy or step in and sell. And what we can see, and we discussed this yesterday, smart money, we were actually looking at candles like this, just coming down to this support area. And I said this support under here, the dollar is likely to find support and bounce. And what does that actually mean? There is currently an inverse relationship between the DXY and the major indices, and of course Bitcoin. They're all interconnected. You must look at many charts to trade the chart in front of you. And you can see if the dollar actually finds this support, as it has done already, and starts to rally up to this 103.477 mark. It's currently 103.152. If it does that, we will get crypto coming back to that secondary support level, and you know where that is across your beloved alts. There are many charts that you have to look at to trade your beloved alts. I started in reverse today because I want to prove out how important it actually is. When we look at the SPX, the S&P 500, we can see that it's currently 38.95, but it hit some very steep smart money resistance levels from 39.31, 39.32 and 39.45, and it's sold down. It's currently coming into a level of support, but it may have a bit more negative pressure to find support, as we can see what is happening with the DXY. If you're only looking at the chart in front of you, you're making a huge mistake. When looking at the DXY, you should also be looking at the euro. The euro came into some very heavy resistance from 107.59 to 107.641. It's currently 107.330. It's quite possible that it will come back and touch and retest this smart money buy level at 107.248, or even lower at this 107.022 level. You can see how everything is interconnected, and it takes a great amount of skill to understand how to trade from these particular charts. But the first thing is you must know that they exist, and you must actually look at the structural levels. And these are not recent indicative price structure. This is all of price structure. If you want to gain this skill of how to look at the market through the eyes of smart money, please pop across to www.ctksmethod.org. And if you're incredibly busy and would just like to not just do the certification, but just get updates through the CTKS Method service, you can register your interest there and you can lock in an incredible ongoing discount. The service is coming soon, and when you actually just pop in your name and email and lock in your discount, so long as you keep it active when the service starts, you'll always have that discount. And believe me, it's going to be 10 times more expensive than that as time goes on and more things get covered. And you will be locking in the institutional grade level of the service, the Rolls-Royce level, the very best of the very best. Looking quickly through the main market, and Masterclass students, you'll get my live chart in TM6. We can see that the VIX, the fear gauge of the market, continues to remain suppressed. But if it starts to spike up, and price is always moving in a wave, so therefore fear and greed are also moving in a wave. If fear spikes up, we'll see negative momentum across risk appetite and the major indices. Also, typically under times like that, the DXY tends to rally, so just be aware of these things. We're always watching. We can see the Nasdaq had a quite nice bounce. And what happened to bond prices? They're starting to normalize. Yields are starting to come down. For the reasons I discussed in yesterday's episode, it looks like the dollar has lost its support, but when you actually look at the market like smart money looks at the market, you'll see it's actually coming into structural support. How different the picture is when you know what you're doing. This is why RIP, or recent indicative price, actually costs so many people so much money, because it creates a false story on the market. Smart money doesn't look like retail looks, it looks deeply in, and we can see gold is just doing so well. Good on you, gold. And when we look at oil, oil has overcome a level of resistance, making higher lows. It's bullish for oil at the current time. Again, there's so many charts you need to trade your beloved alts, and I'm just assuming that most people don't trade Bitcoin, because most people don't. And why is that? Because in the crypto market, watching Bitcoin move around is like watching grass grow. I'm sorry, I don't want to offend anyone, but it's absolutely true. The real percentage gains are in the alts, but they're also incredibly risky, and Bitcoin is less risky. To trade your beloved alts, you must understand what Bitcoin is doing. To trade Bitcoin, you must understand what the main market is doing. And to understand what the main market is doing, you must look at so many charts. That is what separates professionals from novices. And what we do on this channel is all professional. This is just a nice, short and sharp episode today. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.